Bitcoin is repeating patterns of the collapse that happened in late 2022. This was the time when the market saw its cycle low. The bottom fell out. A lot of people lost a lot of money in the FTX collapse. So is now any different? What can we expect going forward with BTC over these coming days and weeks as we head towards the red September? Not only that, but we're going to look at the S&P 500, the NASDAQ, and cryptocurrencies as they continue to collapse, and what that would mean to cryptos if Bitcoin also saw further downside corrections. So before we get started, you know what to do. Hit that like and subscribe. This is your home of macro cycle analysis, studying the past to forecast the future. If you haven't subscribed already, make sure you do that down below. Plus, we also have a special going on with TIA Premium. This is where you guys are pumping your trades, making very significant profits over there, short term and long term. We focus on both sides of the market, pulling those profits and then putting them into longer term investments like real estate as well. We cover all of this with our TIA Premium members. You guys are making absolutely crushing gains over there. So if you want to be part of TIA Premium, use that link in the top of the video description, subscribe to the free newsletter, and we'll be sending out that promo code very, very soon. You should have one in the next couple of hours. If not, don't worry, there'll be another one coming out very, very soon. So subscribe now while you've got that special going on. So let's start with the S&P 500, the NASDAQ, what's going on in the broader market so we can get an idea of what we can expect next for BTC, and then of course, cryptocurrencies as well. So what we've seen for the S&P over the last couple of days, ending that week from last week, was a slight bounce back at a higher low. Note that we talked about here on the channel around this particular low, and of course the move down. We're expecting a correction because of how long that move up had been. Remember, the majority of people are typically wrong, and the majority of people, that goes for your YouTubers, your Twitter people, your media, hedge funds, anyone that's investing in the market are typically wrong, and you've seen that already. Hopefully you've been following along. What has happened is that they were all getting very, very short at these levels, all through here, because of what the economics and the fundamentals were saying. However, the chart and the smart money was saying something different. You can see that the lows were getting bought up at higher and higher prices, even though the fear was extreme. And now I make a very significant point about the fear because of where we currently sit right now. So I was saying just last week or the week before, we were dropping into this low, and this is where that extreme fear came in. 15th, 16th, 17th was a very significant day. It was a significant day for Bitcoin, and you can see for the stock markets, they had their 3 red days before the reversal into Friday, that you started to get huge calls again from the bears, the macro bears, the guys who believe the economy is going to collapse yet again, that they were calling for 4,000 points, so way down here. They were calling for 3,800 points. They were calling for a new cycle low, and the recession is just getting started. Note that there has not been a recession call yet for the US. There has been in Europe. Germany has gone into recession. UK has talked about it. Maybe they're also in one as well. Yet they've hit new all-time highs and are trading around those highs now. And so during this period, the most extreme fear, the highest fear, I'm calling it here, that we've seen in a long time because of that breakout, and the move just went straight up to the upside. This is basically what they were trying to pin the bearish hopes on, looking for further downside targets. Yet what happened from that point is, like we saw last week, move to the upside, a correction. This was around the NVIDIA times it came out in the market. They had their move up to $500 and then move back down. But note, if you're watching a chart, you can see this low was again higher than this low. So for the short term, you can see that the fear was uncalled for. But we're still not out of the doldrums yet. We still haven't broken to new fresh highs. We haven't gone past 4,500 points again, which was a key level for the market getting held back at. So we think this is going to go on for a little bit longer, like we've talked about already. So we're preparing for what's coming next in the year ahead, because we're looking at the macro cycle here as we study the past to then, of course, forecast what we think is going to happen in the future. And that's basically what everyone is trying to do as an investor. Most say you can't do it, but if you're investing in the market, you're forecasting that prices are going to be higher in the future than what they are now. That's if you're buying now, holding, and then hoping they go up. So at the end of the day, everyone that puts their money in is hoping for higher prices. If you don't put your money in, then you're hoping for lower prices in the future so you can then at least get in at a lower price. But what we've seen in history is that over the course of August, September, October, you've probably heard it by now, that the markets will typically go sideways, and some are looking for big red months to the downside. Now, in previous videos, we've covered why it's probably not going to be very severe moves to the downside, and we've potentially already seen the most severe move, talking about the percentage move here. So keep that in mind. Doesn't mean that we can't go down again and test some lower prices. We have some levels here, we have previous tops, there's a small gap here as well. So we can test those lower prices, but let's just look at where the bounce finishes before we then can measure that move to the downside. So we've seen the 6% so far. How much further does this go? We've looked at the potential of just single digits on the S&P 500. So if we bring it back down to those support levels or the previous resistance, which may become support, that still takes us out at single digits, right on the border of it, but it could still be single digits. And if we do the whole move, the whole bull market move, and this technically is a bull market for the S&P 500 here, as we readjust the camera, we're looking down to around this 4,000 level. I don't think it's going to get there because it would have to break through this pretty strong area. If it did, probably looking at wicks, but not monthly closes at that level. But even then, you're just looking at your 12%, okay? So let's keep that all in perspective moving forward for BTC and of course for the stock markets, looking like still more grinding sideways. This is a really huge piece of data as well. So I picked this up again from the good guy, Seth Golden. I was going to say good friends over there as well, but it's just the one guy over on Twitter or X, and he's also got a YouTube channel. To be looking at markets as bullish is basically contrarian, because the majority of people look at it being bearish all the time, yet markets 75% of the time go up. So if you're bearish, when markets are going up 75% of the time, you're pretty much stacking the odds against yourself. That's just the data. Not trying to, well, I'm trying to sway you one way or the other so that you don't lose money in the market. But essentially, if you want to be on the bearish side, it doesn't happen all that often. S&P 500 end of bear market. This is looking at data from 1949 year to date. So we have the end of the bear market. Technically speaking, as we use this for this particular data here, was June 8th. Okay, so trading days to confirm bull market took 165 days from the low, October 12th. We're looking at this, depending on which chart you're on, it looks like October 13th. So nonetheless, that's not the major issue here, but just wanted to bring up that little one-day issue there. Looking at the percentage returns moving forward are ridiculously good for the bulls, okay? So just trying to present you with the data. If you want to take that small percentage to the downside, by all means, it's up to you. But just looking at this, right? 3 months from now, so we're overlaying now, we're bringing all this info together, we're overlaying this years with a big first half trend consolidate around now, okay? If we get it, markets have to consolidate after big moves. We've seen a big move while everyone else has been calling a bear market. Remember, banking crisis low, huge pump, been many moves to the upside, but they haven't felt as big as what is about to come, because not as many people are on board with the bull yet. And when that happens, that's when you've got to start getting scared to move to a macro bear. But that's a long way off yet. So 3 months from now, we see 83% of the time the market is higher. Okay, 6 months from now, 75% of the time the market is higher. And 12 months from now, using this particular date, the end of the bear market, 92% of the time the market is higher, okay? So this is really stacking it on the side of the bears. You could say, well, look, there's still a small percentage that we're not going to be higher. And yes, those particular years were 2002 and 2001, so 2001, 2002 during that bear market. But we've already established on the channel many times before that we are not in a 2001, 2002 type of bear market, and we're actually out of the bear market into a bull market now. The cycle low is in for these markets. That was back through the end of last year, with the exact bottom being the 13th of October. We looked at lows coming in on this channel here, talking about it specifically to you guys. You hopefully remember it. If you do, hit that like button and let me know in the comments section. June potentially being a very significant low, and if the market was to go lower, it wouldn't go lower by that much. Exactly what happened? higher lows and higher lows. The markets has been absolutely phenomenal from that point. So just want to look at those numbers again, because we've presented you this type of data over and over again, going back to the end of last year, early 2023, and then we keep looking at these things. What happens 3 months from now, 6 months from now, and each of these data points that we've presented, the market has been higher from that point. So we're nearly coming up to 12 months from that low. Let's look at this one here, 3 months from the 6th of August. We're looking at about a 5.8% move. That could still work us in to where we are now into September, which would bring us out somewhere in this middle ground here. So we go to 6th of August, roughly about in this zone here. If we did go up an average of that, you're sort of sitting around that 4,800 now, nearly at a new all-time high. Is it going to happen this time? Maybe not. Maybe it's a little lower. Maybe it's a couple of percent, because remember, that's just the average. And what has happened is that you can get multiple different moves. 2.9 is one of the lowest here, besides the negatives. So you get the point. You're going to see higher prices over the next 3 to 12 months, more likely through the 12-month period from this date here. So August 2024, most likely, according to the data here, you're going to see higher prices based off the history here of 74 years, looking at it year to date. Okay, so it's looking very, very healthy for the bulls. On to BTC. So the collapse that we just saw on the 17th of August, that's really been the one big move down. And that's it through this entire period. Basically, since the pump in March, that's the biggest red day that we have seen down. You've got the 9th of March, basically the banking crisis low, but basically since that pump there in this same price zone, there has not been a bigger day than that one that we just saw. I've covered reasons why on the channel as well, just looking at the average true range and the market needing to at least expand on those trading ranges because of how tight the volatility was getting. And it seems like we're going through that process again, as I pointed out in the intro, looking similar to the FTX collapse. So is that something to be scared of? Personally, I don't think so. The macro picture has not changed. The macro cycle, the bull market, still intact. We haven't seen a breakdown yet. Where would that point be? That question often comes up. And I would say if the market breaks down from this significant low right here, which happened in March, and start to close under the 19.5K, if you want to call it around number 20K, that's when you can start to get quite concerned that this bull market is not going to hold. But for now, everything is still lining up for the macro bull market to continue on. We've talked about the grind. We've talked about reasons why this is not just going to pump to 50K or new all-time highs, or like I've even pointed out on the channel, going to 161K, as many of these other analysis of cross YouTube or Twitter point out. They are looking for these copy and paste fractals of Bitcoin pumping from this point and just repeating this particular pattern right here, going from where we currently are. I don't think that is likely. We still have more time at these levels. So that's what we're currently seeing for Bitcoin, and it's also lining up with the grinding stage of the S&P 500. But the positive news is that we see higher prices on the S&P 500 over the coming 3 to 12 months, and more probably over the next 12 months, which also lines up with Bitcoin moving higher over that period after we get through a significant consolidation period, after a pretty good move up of 100% from the low of 15K. So what happened back then was we saw lots of people calling for even further downside, because it's way easier to convince someone that the market is going to collapse than the market is going to go up, even though the markets go up more often than they go down. It's far, far easier because we all lean towards the fear in the market. And so they're drawing lines over here at 9K, 10K, 4K, 3K, 8K, saying that it has to go there before we go up. Now, we looked at these levels because you don't want to just ignore all of these particular levels before, and that could have been an area for it to go down at that time, but we are beyond that time now. So although there is always that slim possibility, and the possibility gets less and less the more time we've spent moving up, and plenty of the other reasons that we've covered here, especially with the time and price over balance. If you don't know what that is, obviously hit the like and subscribe so we can continue to go through that on the channel with you. The possibility is getting slimmer. You basically just don't want to be stacking those very slim opportunities onto your side in the hopes that it goes down there. Meanwhile, miss out on very significant price targets to be getting into BTC. So that's where we currently sit, 25,900, call it 26 at this stage. But this pattern is looking similar to this particular crash where we ground sideways, tested the low again. So potentially we test this low here at 25,200 and then potentially grind away again, maybe get a bounce out. It doesn't look like anything like this is happening. That's obviously a V-shaped recovery and we get that nice bounce out. This is a big slow grind out and then a bounce out, but the move to the upside got weaker. We saw equal moves here and here, but then this move was 50%, so half of these other moves on this side here. So that was telling us that it was getting slower. And of course, guys who are using RSI, the relative strength index, could also see that things were getting a little bit slower by that stage. To the downside, looking at 23,600, that is still the level on the chart because of the weekly and monthly swing chart here and the 50% level from that low to the high. So if we look back at the monthly at this stage, you can see we're still at 23.6, still using those monthly swing tops, monthly swing bottoms as well. And just looking at this yellow line, this horizontal yellow line, that is the old all-time high of the 2017 bull market. It lines up very well with the bottoms that came into the market through mid to late 2022, and then the market recovered and bounced well out of that. It got tested again on the banking crisis low. So one of the biggest crises that we saw in 2023 with a big strong move out to the upside. So you probably know by now, I've gone on record by saying I don't think this low is going to get broken and closed under. We can get wicks, that always happens in BTC, but I don't see it happening on this macro basis. The monthly basis here, I don't see Bitcoin going under and closing under those levels. That would spell big disaster and you would be in a bear market for a very long time. It would not be a quick bounce if there are monthly closes here and then a bounce out of those levels. That type of structure does not happen. Remember, monthly closes under 19.5 spells big disaster longer term for the bulls. The bears potentially will love it, but the bears will probably even get sick of it because this would then collapse the market. It'd be over by that stage. You get a lot of time under this. So multiple, we're not going to see that if this is still the bull market. Of course, there's always that possibility that it happens, in which case that's going to be a big crushing defeat there and a long time. I think the bears would even get sick of the game at those lower stages. So looking forward for BTC, we've got August now, 2 red months down. September, everyone's looking forward to a red September as well. But let's see what happens in terms of this data right here. We're also looking at the grind sideways through the S&P. And it doesn't necessarily mean that September has to be red. It could just be an inside month, or we get a little bit of a push down into September to test the lows of the previous monthly swing bottom at 24,800 and test the 50% level at 23,660. And maybe we see a higher close by that stage or a slightly lower close as well into that zone. Still got a lot to come over there. In terms of crypto, what would that mean? Simple. More downside, probably a lot more downside for cryptos, especially when you compare them against their BTC value. So if you're looking at cryptos against USD, if Bitcoin goes down, probably going to go down, but you're probably going to see them get crushed against their BTC values. And I brought this up on a couple of tweets. It's not very favorable for those people holding cryptos or trying to DCA into crypto. But even just looking at this particular chart here that I put together for Twitter, I'm just looking at the peaks to the bottoms because this is usually the area that a lot of people get interested again in the coins once they've been down for so long. It's always these peak levels. And I like to buy up saying it was a good time to buy in. But you're going from the peaks to the bottoms in every 6 months prior, you're down a lot of money. Hit that subscribe and like. Remember, top of the video description, we've got our TIA premium sale going on. Congratulations to you guys who are crushing the returns, 330, 140, 170. Well done to you guys. I'll see you at the next video. Stay tuned. Plenty more updates coming through. Goodbye for now from Nice, France, and I'll see you at the next video. Peace out.